In this video, I am going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from 26th of July 2021. I will do this technical analysis on the weekly chart and also on the daily chart. So on the weekly chart, we will see like what is going to happen in the market on the broader scale, and then on the daily chart, we will see what is going to happen on the market on the daily basis. This is the weekly chart, and these are the weekly candles. If I analyze this candle, the last candle that was formed for the week of 19th of July 2021, then you can see that clearly it's a bullish candle. It's a bullish candle. So this kind of bullish candle, it indicates that there is a bullish trend in the market. Or the next candle that is going to form, it may be means the chances are that the next candle may be a bullish candle. However, there is a problem with this candle, and this problem is that this candle also it failed to cross or close above the high of this candle, which was 35,091. So this candle and this candle mean these two candles, one candle for the week of 19th of July and one candle for the week of 12th of July. These two candles, they failed to cross and close above the high of this candle, which means now there is a very heavy confluence zone in this case. So this confluence zone can be seen as like this. So there is this very heavy confluence zone. So now in order to move up here for this the Dow Jones Industrial Average Index, if it has to move up, in that case what it needs to do is that on the daily chart it must cross and close above this confluence zone that is at 35,091. Once it crosses above and closes above 35,091, then it will move towards this resistance, which is at 35,700. The resistance is at 35,700, and here we have the support. This support is at 34,500. Then another support, and one of the most critical support here we have, is at 33,500 or 33,600. So these are the support and resistances. So this was the interpretation of this candle. Now let's talk about the technical indicators on the weekly chart. In the technical indicators, we have first the moving averages. So if you see these three moving averages, one is EMA, one is ALMA, and one is WMA, there is a clear fan out, very heavy fan out. And also if you see that the index, it bounced back after hitting this the moving average EMA. In this case, it bounced back and then it formed a very heavy bull candle. Last week I told you that this is going to happen, that the market, this index is going to means this index is going to fall first, and thereafter it will hit the moving average or this particular support, and then it will bounce back. So it did exactly as predicted last week. So so here we are talking about the technical indicators. We have the moving averages. So all of these three moving averages are clear fan out. So there is a very heavy bull trend in the market if we talk about these the moving averages. Now if we look into the Ichimoku, so Ichimoku it is Ichimoku is also supporting the bull trend, but and also there is no chance of the market to hit the Ichimoku in this month. And if we talk about some more technical indicators, then we have these technical indicators. First, we have the stock RSI. So stock RSI, it was moving up, but then this thing happened. This particular thing means initially on Monday, the market came down very heavily, and then it bounced back. So because of which the momentum that the market was gaining initially, it has lost that momentum. But through the numbers, if we see, it is bullish, but I cannot still confirm if it is bullish, because uh, the stock RSI, the K channel has not crossed the 50. It is less than 50. It is 49.11, And if I talk about the MACD, MACD is bearish, MACD is not bullish. So MACD is not supporting the stock RSI. So generally what happen is that a trend is always confirmed, or means we can predict only when these two, stock RSI and MACD, if they support each other. Then we have the RSI, means the momentum. No, there is no momentum in the market, neither for the bulls or neither nor for the bears. So this was the technical analysis on the weekly chart. So weekly chart, there is means yes, some of the indicators are saying that there is a bull trend, and through this, the analysis also, that because it bounced back from its the moving average. So yes, so it seems like that there is a bull trend, but again there is a catch, and the catch is that there is means we have this very heavy confidence zone until and unless market the index crosses and closes above this particular price 35,091. The market is not expected to move in the bull direction. So what we need to do is that particularly on Monday, we need to wait for the Monday. We need to wait, and we need to see like what happens on Monday. If on Monday market fails to cross and close above this particular level, in that case the market will come down, and it will take support, at least means then there will be the support here 34,500, and thereafter, okay, it will find some support on this the moving average. Okay. Now let's move on to the daily chart to see like what is going to happen, or what is more likely to happen on the daily basis. Now we are here on the daily chart. On this daily chart again, if you see that there are almost these 4 or 5 candles, and so the market tried to breach, means the market tried to cross and close above the high of this candle, which was 35,091, but the market failed to do so. So in that case, again means one more thing, the interpretation of this, the last candle, so this last candle is a bull candle. So this bull candle supports the bull trend, but here because the market failed to cross and close above the high of this candle, so there are chances that this interpretation may not work here for the bull candle. And we need to see like what happens on Monday. So if on Monday, if the market failed to cross and close above this particular candle, or if there will not be any gap up opening, in that case the market is expected to fall, because the market has already tried 4 or 5 times to cross and close above this particular candle, but the market failed. So here, because of if the market fails to cross, or to cross and close above this particular candle, in that case there will be negative sentiments in the market, and those negative sentiments will force the traders to lose their existing long position and to enter into the short position. Now if we talk about the technical indicators on this chart, then first we have the moving averages. So these moving averages, there is a clear fan out, and moving averages are clearly supporting the bull trend. So these three candles, they are on the bull side of these the moving averages. If we talk about the Ichimoku is also supporting the bull candle, the bull trend, the bullish trend. And yes, there are chances that market may come down and may hit this the Ichimoku, and may even cross this Ichimoku cloud. And if we talk about some other indicators on this chart, uh, then we have the stock RSI. Stock RSI is bullish. Okay, it is clearly bullish. MACD is also bullish. So stock RSI and MACD both are bullish on the daily chart. And momentum, there is almost 50% momentum in the market. So all of these technical indicators here on the daily chart, they are saying that there is a bull movement in the market. On the daily chart, it is saying all of the technical indicators, but again the problem remains same. The problem is this thing, this the 35,091. The market must cross and close above the 35,091. So what you need to do is that you need to wait for Monday and see like what happens on Monday, on 26th of July. like what happens on 26th of July on Monday, and accordingly take position. So if the market, if you see that if there is a gap up opening in the market, in that case, that, and if the market breaches this mark of 35,091, then you can comfortably enter into the market and you can hold your long position. But if you see that there is a gap down opening, or if the market is showing negative sentiments, in that case, sell. My advice is to sell or to hold, to enter into the short positions. Okay, and so this is how the market is expected to react. Should you wish to participate in my stock market programs, then I have given the links of these programs in the description of this video, and also in the comment section. Okay, guys, so this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from 26th of July 2021.